Welcome, my name is Wim Lievens, and in this little video I'm going to tell you a little bit more about VL bars in the ProRealTime platform. I will share a few slides with you just to explain what my trading philosophy is and how I came to develop these VL bars. Of course, I will explain to you how they are built, what the components of these VL bars are, and what, in my opinion, the advantages are to use these bars in your trading. I will show a few examples in real time on the platform to finish. If you have questions, remarks, don't hesitate to go to my website, mytradeclass.com, and you can ask me any question you like. So let's begin with the presentation. Now, I like to keep things simple, and I have nothing against indicators as long as they serve a certain purpose. Now, I honestly believe that 80, maybe more percent of the information we need to trade is linked to price movement, or being able to read price movements correctly. So my philosophy is actually to trade what I see and to keep it simple. And in order to do that, you have to understand how markets operate, why they move, how they function. The other thing to look at is only price movements. And I can't stress this enough. There's so much information in price movements, in recognizing cycles, ranges, trends, the strength of certain movements, support and resistance tests. There is such a huge mass of information in price movements, and you just have to be able to read this properly. And therefore I honestly believe that every trader should be able to do this first before moving to indicators. Now, I also believe that in order to be successful in trading, that 20% is being able to analyze prices or price movements correctly, and of course using good strategies, but 30% is money management. It's even more important to manage your positions in the right way, and all the rest is control your emotions, leave ego at the door, and well, it's the discipline. Yeah, that's more for trading plans, diaries, and so on. Today I would like to focus with you on these price movements and how we translate that into a simple bar, which will help us, I believe, and can help many traders in their trading. Also, one of the things I believe very strongly in is that, well, we do this little half hour of theory now, but that is normally not what I do in the real world. I think trading is like, swimming or tennis. You can only really learn this by practice. So if you have questions there, don't hesitate. I have lots of material on my website, on my YouTube channel. Don't hesitate. A few topics which actually translate in this tool. Price. You will see the VL bars are only constructed through price movement. I use some EMA levels which can help you. I think for day trading movement gives you an edge over trading time, and how you can combine these. We'll share some ideas. The money management, of course, with VL bars is better, sharper, which I will explain in the next slide. So what is important here is that many things I have talked about in the last, I don't know, 5-6 years in Europe, and many people have listened and followed these courses, is a big part of that is actually incorporated in this VL-bar tool. Now, this one, this one you have probably seen before. And, well, still, what I see today, many people buy when they should be selling, or sell when they should be buying. And there is a reason why we, the sheep, as they sometimes call us, we get slaughtered. And there is, I think, hope for us to stop buying. Normally they sell, buy low, sell high. We sometimes, to be polite, do the exact opposite. And why is that? In this slide, it's just one slide from my courses, but these are the mistakes I see the most. Many traders will trade no matter when, no matter what. They will just wait for certain signals from certain indicators, and they will, pull the trigger. And I don't think that's right. I think first we should look at market conditions and then decide should we trade or not, and then pull the trigger. So trading against or in absence of a trend is not a good idea. Also, a signal or entering the market against or very close to a support or a resistance level is not a good idea. The third issue is, fear of missing out. This is a tough one, especially when there is no context and people just trade certain signals. That is a problem, and over trading is a huge issue. But the one that concerns us now is number 4, and that is late entry. And that is very often due to the use of only indicators. Because if you look at charts in the past, you get some, it gives you the impression that certain indicators will give you the signal, but in reality that is not always so. Optically is something not right, and if you want to do the test, just wait on one of these signals in real time and just use your phone and make a picture or something, and then you will see that from the moment that the indicator gives you the signal, the price has very often moved too far. And so we're always one step late, or sometimes 2 steps. So in order to avoid that, I think it is a lot better to just trade on the price and not on the indicator, which makes some calculation on that price. So that is something I believe very strong in. Also, the playing and the gambling. Well, thankfully, I see less and less of it, and I think many people have called out against that. These special tricks, trading the news and placing orders and in different directions and so on. It's something that I think you should be very careful about. It's something that I personally don't believe in at all, so I would advise strongly against that. Now, this is this is a real chart that was sent to me a few years ago as an analysis. Now, of course, it's a little joke. Makes no sense, of course, to look at these things, but it shows where a lot of our problems as traders are. We want to look at everything. We want to see everything. And I think that is where many of us get confused. And so let's talk about indicators. Now, I'm sitting here in my office 30 kilometers from Brussels, and I have about 250 books on trading in my office. Started trading in 89. I've been trading for a very, very long time. And I have to say, I've tried all these indicators. I've played with them. I've programmed them. I've left, right, and center. But it never really worked well. It sometimes did, and sometimes it didn't. So what do these indicators do? They actually, very often, hide or try to compensate for a lack of knowledge. And you know, if we don't really understand what's happening, it's normal that you feel uncertain. So you seek confirmation, and then somebody comes and says, well, you know, you should use this and this or this indicator, and that will, you know, give you the good signals and the right times. And they will show you examples where that's the case. And then you try it and it doesn't always work. So the problem is that these indicators have these, you know, dogmatic nature where people then start thinking, well, if this one does that, this will happen. But it's not always so. You have trend indicators and oscillators, and the trend ones work in trend markets, and the oscillators work in ranges. But you know, so that means that in some instances they work well, and in other instances they don't. So for me, it's a lot better to just look at price movements, at cycles, and to see where you are, to say, hey, should I be trading here or not? And to see that is a lot more important than to wait for one or another signal. So I think this analysis and the fact of seeing this is done substantially better with VL bars or with movement candles than with indicators. Now, also, when you use too much information, over information, you know, our brain is not wired to cope with this, and we don't always realize this, but we make enormous mistakes by doing this. Apart all that, you know, you can use indicators. Why not? If you're used to use one or the other, and you use it on top of a correct price analysis, why not? You know, you have these things like divergence, or sometimes, you know, you're used to look at these things because they give you some better visual, or you're used to the visual. By all means, use it, continue to use it, but do not forget to look at price movement. That is the key. Now, I'm going to make this very simple. I just have a couple of slides, but this is something that most people know, the higher high, higher low, or vice versa, which could be, sorry, that was too fast, which could be the beginning of a new movement or trend. Now, these are the things I always look at, and that is part of my, you know, trading philosophy, and I look at markets really like this. And many cases, or many traders, are capable to trade in these markets successfully because, you know, they recognize these things, and when markets move, everybody can make money, or most of us can make money. The problem is this. This is the problem, and many people see this too late, because it's easy to say, well, you know, this is a range, and you shouldn't be trading now. But if you see this at the end, if the market is already ranging for the last, I don't know, minutes or hours, and you've entered a position 4 or 5 times, well, it doesn't really help you. Yeah. So you have to see it a lot sooner. I use the EMA 20, exponential moving average 20, which I've also added to the VL bar tool, and I will show you on the ProRealTime platform how I do this. It's very simple. It's a very simple trick, but one of the keys to success and keeping it simple and all that, it of course is true, but it is to have a few set of very simple rules and say, look, when these conditions are in front of me, I will not trade. Not trading is also a position. So And I think all these, circumstances, seeing when markets are good and when they're not good, you can see this a lot better with VL bars or with movement candles than with time. Now, we'll get to that in a minute. Now, you can look at markets in different ways. Many people trade on, simple, Japanese candlesticks, 1 minute, 3 minutes, 5 minutes, 60 minutes, days. It's all good. And I use them for my analysis. So, there's nothing wrong with it. You could also trade on tick charts, volume. That's an interesting one. Some people use range bars, very popular. I've traded with range bars for at least 10 years. I love them. I still do. I think it's a wonderful candle to trade. Then, of course, you have the renko bars and also heikin-ashi bars. And they all have, advantages. They're good tools. You can trade with them. Now, what I've done, what I wanted to do, was to combine some of the, strongest features, some of the advantages, if you want, into one single bar. Now, what I liked was with renko bars, I liked the clarity. Very difficult not to see where this is going. Now, it's not very precise, but it shows you what is happening. Ballpark figure. And I like that. And I like the detail of the range bars, which show you every tick. So I said, well, that's good, but sometimes, the bars change of color and you lose clarity. So what you have in the one, you don't have in the other. You have the detail or you have the clarity. Difficult to have both. Heikin-ashi was a very interesting one. Why? Because it makes the direction so simple. It shows you the trends, the movements in which you are. The downside of heikin-ashi for trading is that not every candle has the same size. You can have some very big candles now, which make it difficult, because if I have to trade with very big candles, very big heikin-ashi candles, where do I put my stop? Sometimes my stop is way too far that I want to. The risk that I have to take is too far. So, I love the detail of the range, love the clarity of the renko, and love the direction of the heikin-ashi, but I wanted this in one candle, and that is what I did. And so I created this. It's been on the market now for 3 years. Many traders in Europe use it. It used to be only on one platform. I now programmed it on other platforms as well. And these are the VL bars, which actually are just a combination of, I would say, what I believe are the best features of range bars, renko bars, and heikin-ashi bars. Now, I'm a very strong believer, especially for day trading, that in order to avoid dead zones, I want to trade movement. So traders who've, know that there are periods, moments in the market when nothing is happening, that all things are dead. It's like sailing when there's no wind. There's no point. You can be the best trader in the world, best sailor in the world. If there's no wind, there's no wind. There's nothing you can do. So, but with these candles, it's very simple. If there's a lot of movement, you will see a lot of bars. If there is no movement, you will see very little bars. Other point, very important, is the risk reward. And that I will show you in one of the next slides. The risk reward with candles which all have the same size is, easier to control, and of course you know exactly how much it is, because that is something with normal candle which is not possible, because candles can be very small, they can be very large, very tall. Okay, so that is another advantage. Now you will also see that I'll use these bars to make my entries more precise, because If you trade with time candles, you have to wait until that candle is ended. So if you're trading on a 5-minute chart, well, and you see a certain movement, and that might even be a strong movement, that 5-minute candle is still building. And it's going up, it's going up, it's going up. Now, where are you going to enter? Normally, you should wait until it's, at the end. But then this candle's probably gone way too far. So you can't get in, or you're in too late. And that is something with real bars. You will very often have a small hesitation underway or whatever, and you can get in much easier and control your risk a lot better. So the other thing, of course, that came with the bars is the market structure high, market structure low, or if you want, reversal signals. Some people call them swing lows, swing highs. Now, of course, a triad, most people know this, is a group of 3 bars, 3 candles. Now, I used exactly the same principle. It's not something that I invented. I just took the same thing from the market structure high, market structure low, and created those with my VL bars. Now, of course, for me, this is a very important point because these reversals, for me, they can be good entry points, because something happened at that level. The balance between sellers and buyers shifted, so that is very good. But also, I can use these structures, these triads, as a money management system. Because once I see a triad like this, and the market tried to reverse, but then continued in the same direction. Well, I said, well, they tried to change the direction of the market at this level, didn't succeed. So that might be a good area where I can put my next stop. You see, so you can manage, you can control your downside substantially better. Good. Now, little point about very important, very important, this money management. Many people don't realize this, but this stuff, this money management, is actually more important if you want to make money than the strategy in itself. Many people are always focused on the signal, this signal or that signal or this indicator or that. I don't think that's true. I think this stuff, the money management, is substantially more important. Now you can see visually, you see here, you see the triad, you see the entry signal. Of course you can lose, you will lose trades as well. But in this, if you take this slide, I don't know how tall it is on your screen, but here that risk is about 3 centimeters. Now you can see immediately that the potential that you have in the other direction, the gain potential, the reward, is substantially bigger. And in my business model, and I discussed this over and over again with my students, is that if you do 100 trades, 15 to 20 trades should give you a result where you make at least 3 times what you risk. And that is realistic. There's no dreaming and no big stories. This is pure reality. So let's say you risk $100 or 100 pounds, 100 euros. That means that 15 to 20% of your trades should generate a reward of 300 or more. Now trust me, 5 to 10 using letting your profits run will give you substantially more than 3, will give you 7 or even 10 or 12. And what many traders don't understand is that these trades, these 5 or 10% or even 20% trades, they make the difference. All the rest is just work. It's just work, protecting your downside, paying some, for some losses, paying for some trading costs. But you of course you will, if you do the analysis correctly, you will win slightly more trades then you lose. But the real money is in the money management. Okay, good. So with these VL bars, you control your downside perfectly. You know exactly how much it is, because if you take a certain bar size, you know how much dollars, how much euros, how much pounds this is. You know this, and so you know every time you enter in on a certain chart with one or other instrument well, you know how much it is. So no surprises. Good. Now you can easily download the whale bars in the marketplace from ProReal code, and you just then import it in the platform. I just added the links here if you don't know how to do this. It's very simple, and you just pull it on the chart and you have it. It's really that simple. Yeah. So you know, just go to the marketplace website and then import it in your platform. Now, I'm just gonna share a few ideas with you how you could use this. Now, there is, of course, substantially more behind it, because there are many courses and mentorships and so on, but it's not the purpose of this video. I just want to give you a few ideas how you could use this. Of course, you can use this in combination with your existing system, because what it will do, it will improve your entries and money management. You can still use, as here you see the example, left you see normal Japanese candles. I put a 1 minute and a 30 minute, and on the right you see I use different colors. Just you know, some people preferred one and other people prefer the other color, but it's just to show you that me personally, I also do my analysis and my movements and what I want to trade. I do this on 1 minute, 5 minutes. I use 30 minutes to see, hey, where am I? I like to use pivot points to see where support and resistance are. I like to see previous day high, previous day low. I like, of course, I look at the big numbers, at support and resistance levels. I look at this stuff just to see, okay, where am I? To be well orientated, if you like, and then I will use if I want to trade on one instrument with one of my students. We do this very often on the Nasdaq or on the Russell. I will use a 1 minute chart as a reference. If I combine different instruments, I will use a 5 minutes, because I want to trade a little bit, you know, slower and another pace. Now, what I do, and this is very important, if you look at the 1 minute chart, you will see that there is basically no indicators on there. But there's one on the bottom, which is the average true range. Now, most of you will know this. This is just how much does this instrument move in the time frame that is shown. Now, I use the 1 minute here, and you see how much in this case is the Nasdaq. It moves 2.5 points a minute. That is about 10 ticks. Very simple. Now, why is that so important? Because I will use this value. I will divide this value by 2.53. Can't give you all the details why that is, but I'll divide that by 2.53, and that will be the size of my bar. That means that the correlation between the whale bar chart and the time chart, which I use for analysis, is well correlated, but I trade on a chart which has a volatility which is 2.53 times less. Now you can do this on any instrument, on any time frame. 5 minutes, 60 minutes, you can do this on stocks, you can do this on commodities, you can do this on forex, you can do this on any. The principle is always the same. But it's very important, you know, we say in here in Brussels, we say, you know, you compare apples with apples. That means that if you use two charts, one to see which movement you want to trade, or you use some other analysis or one time frame, and then you want to move this over to a bar in which you can trade more precise, these two have to work together. Now this is how you do it. You just, you know, you put the ATR on there, and then you use it on 8 bars. I always use 8 bars, and then you divide this by 2.53. And you have to adapt it, because if you trade Nasdaq here, if we trade the Nasdaq here in Europe in the morning, it's not even close to the instrument it is in the afternoon. In the afternoon, it's like 6-7 times more volatile. So then you have to adapt your bar. Okay, good. Now let's look at this thing in real time. So let's just put this on here, right? And you see, just going to click here, and so you can change, of course, the brick size. And the brick size is, again, as I said, ATR divided by 2.53 is measured in ticks. So if I say, let's say that the Nasdaq is moving at, I don't know, 2.5 or 3 points a minute. I divide that by 3. That would give me 1 point, which is 4 ticks. The brick size here then would be 4. I can put the exponential moving average on here. I can put it away. What I also do is you can put the indicator twice or 3 times on the chart, and you can use different exponential moving averages. I always use the 20 to see, hey, am I in a trend, yes or no? For the signals, I very often use something. It's 3-8. I create these little bands, you know, to help me visually. But in the end of the day, I don't really need them. Yeah. So you can also put. Some people love to use the 50 moving average. Well, you can put that in as well. Very, very, very simple. Now, let's look at this. And I just want to, you know, give you a few signals and a few ideas. Now, let's say that you are here in a trend, a new trend, high correction on the EMA. That would be an entry. Goes up. I would put my stop loss under there and would then probably be stopped out. Now again, when is the trend for me over? You see this, that here I am like 2.5 centimeters over the EMA 20. But here I drop under it. At this level there, where my the mouse cursor is now, I would not trade. I would just say, hey, there is no direction. I am very likely gonna end up in a sideways market, which in this case didn't happen. It just went down. But again, that's what I do. And I want to show this because I think it's very important on one of my whiteboards here. So let's say this is the EMA 20. Now let's say this is the market in red. And you see in a trend market, it goes away, comes back, might be slightly under it, then goes back up again, comes back, and so on. Now what we always do, we try to find triads in these areas, and that's where we trade, because we move, trade these impulse moves, and then we move our stops. Now let's say this happens. You get something like this, and then very often you get a lower high, then boom, it falls under here. Now at this moment, that is the first indication that the trend move is over. And that's where, for me, trading on this dimension ends. I will not trade until I see the beginning of a new move. So what could happen now? You could have, sideways markets like this, that, you can't do anything. You could have this. Let's say the market moves up a little bit, shows a little strength, comes down, correction, and I could trade a triad here. You see, because it showed me some strength here. It could go in the other way, could show weakness, and then give me a short entry here with a triad to the downside. You understand? It is trade what you see. If you combine this bar, the precision, the clarity, the advantages you have in the money management system to your normal charts where you're used to see certain things, this, in my opinion, will really improve your trading. Now, clean this up and you see how this works. There's not a lot going on now. I can show you how this looks a bit taller. You see, it's a little too much. You see how clear the visual is. Of course, you can change the colors as you like, as you know, for this trading platform. So let's go back for the last slides here on here. There are quite some, my YouTube channel. There will be more and more English videos in the months coming forward. So far it's been German, French and Dutch, but there's a lot of material on there, and there will also be in the future. If you want to contact me, go through my website, and if you have questions, don't hesitate. So if you decide to trade with my real bars, I wish you good luck, and maybe talk to you in the future. Bye bye.